you are an NRI living in Dubai, Singapore, London, or anywhere else in the world, you have probably watched India's growth story from the sidelines. You know the opportunity is real, but the real question isn't whether to invest in India, it's where to invest across large caps, mid caps, and small caps. To answer that, I went through the White Oak Capital Fund research report and their analysis of 10-year rolling SIP returns across multiple market cycles. And one thing stood out. Not small caps, not large caps, mid caps consistently outperformed their peers in average returns, median returns, and even in the probability of generating double-digit outcomes. That's why in this video, we'll explore why Indian mid-caps deserve your attention, especially as an NRI who can invest through the GIFT City structure, which offers fully repatriable returns, tax-free benefits, zero paperwork, and the ability to invest in dollars or your global currency without any rupee conversion. So why do mid-caps have massive potential in India? Here are 4 reasons fully backed by numbers. First, they are capturing a rising share of India's profit pool. So, mid-cap PAT to GDP has grown from 0.6% in CY20 to 1.7% in CY25E, nearly a 3x increase in profit share. Compare that to the Nifty 100, which moved from 2.1% to 3.3%, only 0.5x growth over the same period. So mid-caps are expanding their footprint in the economy far faster than the large caps. Second, higher average earnings growth. So mid-cap earnings growth has consistently outpaced the Nifty 100 in recent years. In FY 2020 alone, mid-cap earnings growth spiked close to 170% year-on-year, far exceeding large caps. Yes, it's volatile, but over full market cycles, the compounding has been superior. Third, cleaner balance sheets. The leverage in the Nifty Midcap 150 has fallen from around 0.7x in FY 18-19 to approximately 0.4x in FY 25E. In short, it will have lower debt combined with the rising profits, which means stronger and more sustainable growth, not growth fueled by borrowing but by operational strength. Fourth, the return on equity gap is narrowing. Historically, large caps enjoyed a significant ROE advantage. However, the gap between the NSE 100 and the NSE Midcap Index has steadily narrowed. With improving ROE and declining leverage, capital efficiency in midcaps is strengthening and markets tend to reward such efficiency. So the bottom line, midcaps are in the scaling phase of their life cycle. They are gaining profit share, growing earnings faster, reducing debt, and improving return on capital. That combination is rare. But just remember, higher potential comes with higher volatility. You don't get mid-cap returns with large cap stability. That's a trade-off. So how does this fit into your portfolio as an NRI? Basically, a 10 to 30% allocation to Indian mid-caps can serve as a growth satellite alongside your core holdings. But keep in mind, mid-caps are not emergency money. They are growth capital. You need at least 7 to 10 year horizon to let compounding work its magic. Now the question is, how do you actually invest? You have 2 routes. The traditional NRI-NRO route involves paperwork, rupee conversion, and a 12.5% LTCG tax. Or you can go fully digital, no rupee conversion, and tax-free returns. If that second option sounds better, let me introduce you to the Sundaram India Midcap Gift Fund for global investors. So Sundaram has launched a feeder fund that lets you access their flagship domestic midcap strategy through the tax-efficient GIFT City structure. So the underlying Sundaram Midcap Fund has been in existence since 2002, currently manages an AUM of approximately 13,000 crore and has major allocations to banks, industrial products and financial services. So to put the track record in perspective, if you had invested $100K in the Sundaram Midcap Fund back in 2002, it would have outperformed both the Nifty Midcap 150 TRI and the MSCI India Midcap Index over the long term. So of course, past returns don't guarantee future performance, but the consistency is hard to ignore. So over here, the minimum investment is $5,000 and the fund is designed specifically for NRIs and foreign investors seeking exposure to the Indian mid-cap sector. Now, the question is, how do you access it? So you can invest through Belong for a completely digital onboarding and investment process. We are an IFSCA regulated entity. So IFSCA is a statutory authority established by the Government of India that regulates financial entities operating within India's IFSC zones such as GIFT City. GIFT City stands for Gujarat International Finance Tech City. It is India's initiative to build a global financial hub similar to Singapore or Dubai within the country, and it's located in Gandhinagar, Gujarat. And if you would like to invest in the Sundaram Midcap Fund through GIFT City route or learn more about it, drop a comment below or click the link in the description. Thank you so much.